Hello, everyone, and welcome. Happy Friday. It is November 21st, 2025, Trading Trends ETF edition. Let's just get right into it. We'll recap, if you could tell from the, the mode and the mood, rather, of the videos past couple of days. We have had some correction in the market, for sure. We were bullish last week. Risk came off very quickly across the areas. We will take a look at almost every chart that matters on the day. Today was the fifth biggest day of the year for the small caps, a rip-roaring rally, but not holding all assets. I'm looking at you, crypto nonsense. We'll take a look at these charts. So today, home construction, they really gobbled it up 5%, a massive move rotating into home construction. We'll take a look at that chart. Healthcare to new 52-week highs. No one told them about any issues in crypto land or de-risking. Eli Lilly becomes the first trillion-dollar company. Also, Johnson & Johnson, new all-time highs. So things looking phenomenal in healthcare and in biotech, which had a wonderful week. And regional banks today up about healthcare and regional banks between them about up 2 and 3%. We'll take a look at the charts. And today, volatility, China and Bitcoin all went to the downside. Volatility did come off. China did go down, as did Bitcoin. And when you look back at the week, when you really zoom out, this week really was about, when it was all said and done, the absolute moves was a 12% approximate drop in Bitcoin and Ethereum, these assets that have been up almost in perpetuity since those white papers came out, it seems. We're down about 12% this week. We'll take a look at the charts. They are in no man's land for much of it. And a 9% pop in volatility. VXX was your best performing ETF. So definitely fears here. So let's get into the charts and see if it's any setup, anything actionable. I did not do a ton. It was not a fun week. When we look at some of the losers, I in them, and we had been talking about them, looking at specifically Ethereum and uranium, and they had nasty weeks. We'll get to this in a second. First off, so we'll get to the SPY. Tesla down 1%. They didn't enjoy today's gain. Small caps, as I said, up nearly 3%, a massive move. Google up a huge 3.5%. Just an amazing looking stock is Google, just with a lot of things. So the Gemini, people buying into it, taking away share from OpenAI. People are, they're just viewing it very well. Amazon up 1.5%. AMD down 1%. Microsoft down 1%, as you know, they own a big chunk of OpenAI. There's definitely bifurcation within the Mag 7 complex. Apple up 2%. Meta up about 85 bips. Oracle, it's an interesting story, down 6%. A lot of people, so their CDSs were, blowing up, and folks are basically hedging their downside for that kind of spend on AI in terms of Oracle. You remember this had a huge pop today, down 6%. As long as, we'll get through the charts, as long as Bitcoin and, to me, Oracle stays heavy, the market's not going to stick the landing here, as it were, and get back to 6,700. We'll talk about some of the crucial levels. I know I was calling for all-time highs, next week or into December. It's still possible. The S&P is literally 4% away from new all-time highs. Crypto is not the market. Market is not crypto, but it is a risk-off signal, and they are still risk-off. And until it performs like better, I don't think the market is going to have, it's going to be healthcare, something like that, which is nice rotation. But we need a little bit more for those new highs, of course. Broadcom down 2% and Micron up 3%. All right, so let's get to the tape of the day here. So as soon as they opened it from the get-go, they were selling it off. We finally found a bottom at about 10:30 a.m., and then a nice rally from 11 to about 11:30. Took us all the way from 653 to 660, and then we held VWAP throughout, although a whimper on the close here. You can see VWAP at 658 even, and our closing level 659. So as I zoom out, the more important thing here, so obviously you had a horrible bearish engulfing here. It took out the last, easily 4 days of trading the whole week. Very similar to what we had here on October 10th. What happened after the 10th? We resolved higher, right? Okay, but what you don't like to see here is lower lows in the RSI as well. It really lets me know that we're going to sell the rip market and ask questions later. Today, not a horrible looking candle. We did touch 664.5, and it proved that we were not ready for that, but we did hold VWAP. So, and the buyers stood in where they had to. All that being said, the market is still overall strong when we're looking at SPY. It doesn't have to be on NVIDIA. I didn't have a great feeling when we put that much pressure on one company, and they delivered, and then still you saw what happened the day after with a massive reversal, which only happened 3 times in S&P history. What do you know? All that being said, I still think over the next 2 weeks or so, it's good news and bad news. I think we'll get to 670, which is about 11 points away in the S&P. That's about 2% bounce from here. I think we'll get it. It's not going to be a straight line. There's a yen carry trade that's involved. That people are thinking that you borrow that and then you sell something that you long, say for that you're up a lot, like Bitcoin, for example, a gainer. So a lot of things going on, but until that stabilizes, I really need to see us, and it was a similar level for NVIDIA earnings was 190. I want to see that hold and go forward, and for SPY it was 670. I'm not. This is guilty until proven innocent to me. Under 670, I need to see successive closes above 670, and that will let me know. That means likely that corresponds with 50 RSI, and these moving averages will start to trend higher. I'm not quite yet questioning, that the resistance at 685. That's very likely as well. But for right now, I think you have $11 in SPY. You got a nice 2% rally over the next 2 to 3 weeks. And then you have to digest what happens from there. Obviously, hopefully sectors don't fall apart. The risk-off ones do look a little bit dicey. I'm, talking about Staples. XLC has gotten there because Google's doing all the weight, pulling all the weight while Meta is not performing, and Netflix hasn't either, and Disney. There's many players in there that have been underperforming recently. So all in all, I do think you'll get about a 2% bounce over the next 2-ish weeks. S&P looks fine. We'll take other charts that look much, much, much worse than this, but still your ultimate levels here. And just with seeing Germany touch its 200-day moving average, I did get me up at night to see if eventually do we see a move towards 6,200 in S&P and we get a real washout, because we didn't get oversold on this yesterday at the lows. We got to about we finished with a 35 RSI. So, and also S&P has not been bid above 50 RSI since November the 12th. So it's been 9 days of this kind of this significant weakness. But let's go on some of the charts here across the land in ETF world, and you'll see what I'm talking about. So let's get into it first. ITB. Oh, and next thing, the volatility is not done. Last thing, the downside, like I said, that's the ultimate downside. You obviously don't want to see 6,200 get touched. Those are levels we first got in July of this year, and hopefully we said goodbye to them in August. But I still can't rule out for near term that 650. I hope this holds. It's been holding since mid-September. I expect it to, but you do have to, because I think buyers will step in there. But so I have 2% to the upside, although there's a little more risk due to positioning if that was a true washout, and to the downside, the real actual downside about 1.5%. So typically I like those rewards, but crypto looks very, very weak. You have to see how it trades this weekend. We have hey, what's going on, Gaston? We have a ticker. Hey, can you see MELI, Mercado Libre? Yes, the Amazon of Argentina. We will take a look at that. I'm just going to make you wait till the end of the show. Thank you very much for that. All right, let's get to the maybe this will help illuminate that trade. We'll see. Because, by the way, Latin America is the place to be, so I can already tell, tactically, we'll see if it fits. But MELI, I can already tell I probably like it. Number one here, they gobbled it up, a multiple sigma move here, about 4 standard deviations is home construction. Look at this, up 5%. Home construction has been very interesting. Part of the problem with the market, the digestion of, they're very likely not going to cut last week or in 2 weeks, and the market's having a little bit of a temper tantrum. And it can happen from time to time. And Williams is saying one thing, and then Cook's saying another, blah, blah, blah. Now I think it's about 65% that they do, in fact, cut. Some folks think they should do 50 bips. So it's a messy situation out there. The home builders, let me move that box, are reacting in their own way. So crazy looking chart. This peaked last Thanksgiving, truly, at in terms of 1 year view, at $126. Okay. It fell out of bed December 13th of last year. No, I can't say that again, Siri. So it fell out of bed mid-December of last year and really has formed a recovery as of August 5th. I'm doing this by closes above 200 moving averages. Still a little bit guilty, though, because the 200-day moving average is still going lower. Where it is still going lower, the near-term peak was early September at 118. And look at it right now. We are exactly at what the 200-day moving average is today for home construction. Now what? I like it for the next about a week to 2 weeks. I wouldn't, blow your heads off with the trade. It had a nice move from 92 here to 99 in a very difficult, tape. I do think this heads to 102 over the next 2 weeks and possibly as high as 104. So just be careful with options. Implied vol across the board for bidding up put insurance is bid here. This is just coming off oversold behavior, so which it hasn't been since January. But see what happened there. It still was under a sliding 200 moving average. So this is a very extremely heavy weight right here at 99. I think it'll hold. I think the floor, though, possibly this could slip back to $94. I know it seems like a mixed picture, but that's the market right now. But I do like the upside. I think they buy this in participant anticipation of that rate cut in early December. And I think this heads to about 102. So it does this little dance like we usually see, 102. And then after that, it probably still has to deal with a 200-day moving average. Still looks like it's doing a nice job trying to balance here and stabilize. But again, this group has not been above 50 RSI since mid-September. Just lets me know when the going gets tough, and it's getting tough right here, the 200-day, they're probably going to clock out. And that's why I'm giving it only about another, realistically, about another $2 of upside over the next 2 to 3 weeks. But that was home construction, a beautiful, beautiful day, up 5%. Let's talk about the bell of the ball for the day. To the upside is healthcare up 2% to new 52-week highs. This thing has been overbought since November 11th. That's 10 days ever since you had that breakout above essentially 148. Here we are to 155, essentially closed. They launched it. They sent it to 156, and then down from there slightly. But VWAP was 154. Beautiful trading. Currently at 76 RSI. This one's had a great looking week. For me, full evaluation here. But again, folks that are flocking to defensives and trying to get away a bit from AI trade all around in terms of that. CapEx is going to come back into a nice ROI for these firms, a la Oracle, Microsoft, etc. For me, one full evaluation here is about 153. That's a beautiful looking candle. Could go higher short term, 156, let's say, just due to that lack of positioning. But I don't want to chase this one. I'd rather have a better entry at 149, potentially on some sort of when the beta gobble does happen, maybe gobble ahead of Thanksgiving. Who knows? Seasonality is there too, but I'm not really sure if that's going to be enough. You really kind of have to see what Bitcoin and Ethereum are signaling for risk. I know it's a symptom, but I just want to, that will tell me where the market stands truly. So this one I still like. You probably have a chance over the next 2-ish weeks, I would think, to drop it to the spot of the prior breakout. So for this would be 150, and I like that, and that would be your entry, about 3% or so off from here. But healthcare, absolutely, they're flocking to it. This was not, I don't want to say investable like it's China or something back in the day, but this really only broke out October 1st. Once you got that close, look at everything happened on October 1st. It pierced above 50 RSI. The 200-day moving average finally really got flat at the time at 138.5. And then you had a breakout right there above 140, above those prior highs going back to April. So if you combine, a 6-month high with over 50 RSI and a flatlining 200-day moving average, the sentiment has matured. That's what we're trying to see, in terms of all these assets, essentially. So that is healthcare. I would like to get it a little bit cheaper in a few weeks, but like I said. All right, check out regional banks here. They gobbled that up today. This was a point of a critical stress just several days ago and also a couple of months ago. Today they loved it, though, up nearly 3.5%. Regional banks. It looks extremely heavy here still, though, at about that 62 level. You are at a 200-day moving average of 59.77. It surged above that today with today's multiple standard deviation move. The 200-day moving average is going lower by about 2 cents a day. It is above 50 RSI. This has been under 50 RSI though since early September or late September rather. Don't love it here, to be honest. I just don't love the upside on it. Today was an interesting rally, but obviously it has not had a great week, going from 62 down to 58 very quickly. But something tells me that this still wants to get to about sub its 200-day moving average. I could see even $57 in the cards, but 58, 59 looks more likely. We'll see how the market digests this, but it does not look, this does not look particularly super healthy to me. It looks a little bit heavy right about, it looks capsided at 62. It did it there, got to Kembid, went right lower. Today got to 62.17, and we'll see if it has enough. I don't think it does, so I think more downside for the regional banks. Hopefully it's not a pull on the market. All right, the biggest losers today. So the biggest winners, like I said, was home construction, healthcare, and regional banks. Congrats. If you were in those, you found a bright spot. The downside, this is actually inverse, so this was positive for the markets, but volatility was down 5.5% today. We've been looking at this closely. Of course, it's always difficult to chart a non-time series like VXX, but for me, the level I've been watching, and we're talking about it, was 38. Once I see it pierce 38, just kind of like, I know some folks, traders, look at UVXY. I look at VXX, all kind of, similar flavors of ice cream. But for me, the level had been, 38 near term. Back in mid-October, if you remember, we basically got to 41, and that signaled the end of the move. VXX actually has not been above 41 since early August. It almost seems like different times. So right here, and again, this is what I'm talking about. Yesterday, we touched essentially 40. I'm rounding for simplicity's sake. And today, 40.5, and they got to Kembid, and it went all the way lower. Something that helps me, think about, you got 2% upside in S&P in the next 2 weeks is kind of what I'm seeing here with the volatility. What I don't love is that expansion happening here that gives leeway to say, okay, let's see if we can get to 42 and so on and so forth. It doesn't make it run at the 200-day moving average. I don't think it does. I think it kind of it blew its head off right there at that 40 mark. Similar action. That's why it's corresponding with the bearish engulfing for SPY. Do we resolve higher? Or do we, see what Bitcoin does this weekend and we open down in the future Sunday night and then it spills over into Asia? SoftBank takes losses and you see, S&P down 60 bips on Monday. So it could be a nauseating, self-fulfilling prophecy. We'll see. But volatility, I really do want to say, I think this I don't think it falls off a cliff, hence why I don't also see new all-time highs. These things are all correlated for the S&P. But I do see this dropping to about $34 over the next 2-ish weeks, 2 to 3 weeks. So that would be about, a little bit more than a 10% decline, half of which it did, today. So I'm saying in addition to that. And then from there, again, the 52-week lows was back from here, October 27th, the month that we struck, all-time high. So it seems distant. But I do think you're having volatility come off. It had a rocket week, but a nasty day. Let's see what else in terms of absolute terms they actually sold off today. China, this is specific makeup of the different cap weights. This is the ASHR, similar to an FXI, but this one they sold off today, down 1.2%. I am long the EEM, which I thought was going to be a bright spot to protect, right? Because U.S. not such a great story due to the flows of AI and that scare of ROI not getting it back potentially near term an AI. But China, still same thing here. So look at this. October 10th, they also had a bearish engulfing. Look at that. Exactly same level lows, and this is coinciding with the late August high. So a very important level here for the A-share. Similar to what I said for SPY goes for this. I think this pops to about, I don't want to say pops, but over the next 2 to 3 weeks as well as the time frame, I think this gets to $33 even. I'm not so sure you have new highs in the cards that it's going to break north of 34. There's quite a difference between 33 and 34. Last I checked, about 3%. So I do think you get a rally over the next 2-3 weeks. The flows still look good in this. I like that it held there. Nice, decent looking hammer here, holding it down on today's candle. It's still down 1.2 today. They did sell down hard, and then they bounced it. It was VWAP 3170. It did hold by a hair. Kind of the candle you needed. But I do think you're going to move to 33 even. Best case, I don't think you take that out 33.5, those highs. That looks like a very short term near double top. But I think coming off those lows, that's going to be asking too much. All right. Next thing they sold off, we're going to touch this in a couple different ways today, but it wasn't IBIT or BITO. It was the Cathie Wood basket of Bitcoin ARKB. So all the crap trades all together, let's be honest here. So this is Cathie's basket. So again, what goes for this basically goes for Bitcoin. What I'm pointing out here is the 200-day moving average going lower, albeit 2 cents a day, but that's just because this is a $34 stock, or it once was once upon a time. And these have all been in purgatory since election day, okay? It's just an easy way to put the number on it. I know you have Tom Lee talking about the liquidation that happened on the 10th, and truly the charts have not looked the same from the 10th. Again, the all-time highs for this specific ETF at 42. The 200-day is at 34. Now what? So we're not hopefully not to kick a dead horse on this too many times. This to me should have based a while ago, but the flows have looked horrendous, and this is getting its butt kicked by SPY since October 13th. I'm looking at relative strength. So this has just been falling out of bed. I would be almost like a lazy trader on this in terms of great looking hammer here, but you're oversold. So what weight does it carry? We shall see. But similar to Bitcoin and on this specific ETF, I would almost wait. Similar to like a healthcare, you didn't have to be struggling and losing your hair and getting heartburn in it all year. You could have bought that breakout like we said. If you want to be lazy here, I'm not saying buy 6-month highs, but for this, maybe a close, 2-3 successive closes above 34.43, and that'll let you know things are okay again. For Bitcoin, I believe that's 105K. So yeah, you're going to be paying up, but that will restore essentially sentiment of the past year view that Bitcoin has returned back to its ways. Right here, it looks like people are doubting its efficacy on the quantum computing advances, and you're seeing a lot of money come out of it. So it'd almost be better if you see the dust lift here. Otherwise, if you have it in a 25-year account like I do, if you do it like that, then just leave it aside because it's had 60, 70, 80% drawdowns multiple times through its young history. So for this right here, let's get back to the charts. Yeah, this should, I'm looking at the chart strictly, this should bounce to the 200-day moving average. Probably, actually, no, I take that back. I take it back. I just for this specific ETF, about $1 before the 200 moving average. Maybe it gets magnetized too, but I have actually 33.5 for a level here, which is $5 away. So you would crush it in terms of upside here. Nice looking candle. Again, remember yesterday this thing got slaughtered down 3.5%, same as the day before, and now down 2%. So I'm not so sure it's done. But yeah, this looks like it's rolling over. Does not look good. Does not look good short to medium term for Bitcoin. Okay, so those were the losers: Volatility, China, and ARKB today. Let's get into the week here. How are we doing on time? What the hell? All right. Top 3 gainers of the past 5 days. If we already mentioned the ticker, I'm not going to go into it too much. Your number one rally riser this week was Volatility. Shocker. Up 9% this week, or an average of almost 2% a day. And today it gave back 5.5%. So Volatility was where they flocked this week, puts in pretty much everything. IV was bumped up. Number 2, this was not risk off. This was risk on. It was Kathy's basket of ARK Genomic Revolution Fund. A beautiful week, up 8%. Today, up 7%. Healthcare, a great place to be in this basket as well. It's above 50 RSI for the first time since Halloween. Great looking candle. Biotechs have been all the rage here. This looks good. It's an interesting point because at 28.5 is the 1-day exponential moving average. So I'm curious where it finds its footing from here. I don't want to say this is corresponding with risk on period like say what Bitcoin is, but it's interesting to see because I'm seeing 52-week highs in IBB and other biotech baskets. But this looks like it has a little bit more to go. I'm not so sure if it has 32 in the cards, but I do think it wants to at least tangle with at least, I'm looking at 31 for a target. And again, don't forget, this made highs just literally 1 month ago at 34. Again, rising 200-day moving average, never got tested. So this is not, a Bitcoin or anything like this. This actually hasn't really even been tested since late August. So great looking chart in ARKG. Looks like it has a little bit more upside to go, probably $31. And the second best ETF this week, technically first, because VXX is an inverse. It wants the market to peak. So ARKG, the best performer this week. Number 2, somewhat related, is XLV, although much less gains. ARKG did 8% in a week, for goodness sakes. XLV did 2%. We already talked about this earlier. And there you go. It was up 2% today. So there are your gains of the past 5 days. Not a ton to flock to, but it was Volatility, wow, ARKG, and then healthcare. So basically healthcare. Losers. Ethereum, I've been in this one. I think I had a little bit more hair at the beginning of the week. Ethereum down 13% in the past 5 days, or almost 3% a day. Today, basically doing that, down 2% almost. This one fell out of bed just recently. So, I think next is IBIT, which performed second worst. So this is not oversold just yet. It had been in April when the SPY hit the 52-week lows. The level then was $11. The 200-day moving average here is flatlined, just Mexican standoff right there, stuck at 23.11. We closed beneath it for the first time 4 days ago, and that's when really things can change very, very quickly. And again, this peaked in late August when Ethereum had its amazing run all the way to $37. I'm looking at the ETF. So again, based on bounces, yeah, this should be moving higher. There are significant levels of resistance, though, now higher that exist. I think you get a move. Definitely not going to be linear. Definitely going to be frustrating. Look at the moving averages; just looks so heavy, like they're going to sell into any type of liquidity that you get. That's what that looks like to me, and it looks ugly here. It's good to see that today's low of 1984. Hey, Orson Welles and Taylor Swift, that held right there. That was the levels that we had been looking at in mid-July, right before we reached overbought behavior. So good to see. But like I said, you should be getting a pop here to about 25.5 or a $4 increase. That's 20% over the next 3 weeks. We'll see. This has fell very quickly. It's not oversold yet. The thing that makes me not so convinced about that, just strictly reading the charts, is this hasn't been over 50 RSI since early October. So again, it's kind of like that thing once the going gets up, although it can flock the other way in crypto, as we know. It's really, I think Ben Carlson wrote a thing, it's really an amazing asset. When it is going, it's a ridiculous asset. When it's going up, it seems like nothing's going to stop it. When it's going down, it seems like nothing's going to stop it. Maybe because it's based in, future returns. Anyway, so that's it for Ethereum. Let's look at the next one. Maybe it'll illuminate a little bit more. So IBIT was the second worst performer, down 11% or nearly 2% a day. It did exactly that today. Good looking hammer here. This has been in purgatory, actually downgraded from purgatory to hell as of election day. The 200-day moving average is stuck there at, we'll call it $59, and it's done a kiss of death, a slinky move. And if it had only just been range bound and stuck between the highs struck on October 6th of $72 and right there $58, even that massive volatility, that would have been fine, because you have this long rectangle that would have been, really would have just been conserved energy and then a breakout. That's what we'd been expecting. But once this action started, starting November 4th, and now you were oversold in Bitcoin for the first time all year, it can't possibly give you warm fuzzies. So again, I would almost rather be a lazy trader on this, wait for a 50 RSI, which would likely correspond with a close above $59. I think over the next 2-3 weeks, you get to about $57. And that's when I think things can get ugly, because that's not even getting to 200 moving average. So in Bitcoin equivalency, that would bounce to basically 102K and then drop again. And that's kind of what I'm maybe expecting in the cards. It's crypto. Anything can happen. We could be range bound for 3 months. I'll look at a couple different overlays. Just expect the unexpected with this nonsense. But that's basically what I'm having here. This old support that we've been banking on since July is now looking like fierce resistance. And again, S&P is 4% away from new all-time highs. So again, in terms of candle patterns, you want to see this at least get cut in half. Yesterday was an ugly day. Today down 2%. I'm not so sure it's over. Of course, see how it trades into the weekend. All right, and the next one, and this one also was painful, uranium. It was really a lot of the momentum trades, as you could tell from the moving averages. But uranium is still at least above a rising 200-day. Bitcoin, they just liquidated the hell out of it. Uranium, a nasty week, down 7%. Today it was down 1%. You also got a hammer here in many different charts. I think, again, you need the momentum trade to resolve higher, at least in the short term. The chart's telling me this should get to about $47. From 41.5, that is massive money to be made. You go out and buy January 46 calls first thing Monday morning, and oh no. But you want to see this settle. Again, it's had a rough week, still down over 1%. Give us a little bit of time. Your support, and with these big vol assets, you really want to give it the 200-day moving average and see it have some slope. It's right here at 36. To me, the floor on this should be about this 41 that it had going to this level here from mid-July. These former highs, actually, from the end of June, rather. So I think it should hold. But again, this is very correlated with the momentum trade, AI, even Bitcoin, etc., and power generation. All right, so that was down. Like I said, I do expect to move, though, to about $47, but I am not banking on it. Things look weak. Wait for the dust to settle. Monitor honestly different kind of candle patterns on across markets, multi-asset. Top 3 trades of the past 5 days: short Ethereum, short IBIT, long volatility. Now let's zoom out. When in doubt, zoom out. Top 3 trades of the past 52 weeks. Where are we? This doesn't give me particularly great warm fuzzies about S&P because none of them are super correlated. Number 1, no, it's not FedEx. No, not that. You know what I was typing. GDX, your number 1 gainer. It is still the story, but let's see how this one's been doing. This peaked October 16th at $85. And then we had, again, you have the messy W formations happening across markets. For this equivalence, it means it sank to 68. And right now it's at 49 RSI, essentially. You see what the chart did in the past, 5 days. We're talking about it because it's up 93% year over year. That is your number 1 performing ETF in any ETF land, 1X. Right here, I think you're going to get an opportunity if beta switches up. Okay, if the market does find its footing, they are not going to. I don't think they're going to keep this up right here. So I think GDX has potential. I don't want to say trouble in front of it, but I don't like it for the next 2 weeks. To me, this can. I don't want to say plunge, but this looks like it could go back to that 68 level. I don't like upside from here short term. It's a messy chart. Overall, I do think short term, I'm saying it's messy. Short term, I think we hang around $74, $75 level. But over the next 2-ish weeks, I do think we move a little bit more south towards 70 with a possible floor of 68. I would encourage this from the long side when you get that opportunity in about early mid-December. I would think something sub 74 would be a good entry, but I don't want to bid it up here today. That's your number 1 leader year over year is the GDX. Number 2 is a correlated metal trade, of course, silver, up 62% year over year. So we got GDX up 93, and then you got SLV up 62%. Similar to what I said goes for it. I think SLV will hang in around the $45 level. I don't like it, though, for the next 2 weeks. I think this hasn't moved down to about 42, coinciding with those lows from October 27th and November 4th, same as GDX. And then I would love to buy it around there. But again, I would wait for these for about 2-ish weeks. I don't think they're going to be super bid up. I don't. And then number 3, South Korea, your number 3 leader. Okay, so we're talking about gold miners, silver, and EWI. We're not talking SMH. We're not talking MAGs, MAG 7. We're not talking, stuff like that. And if I kept going, number 4, it's like EUFN, European financials. So the S&P story, the market very likely digesting these big CapEx spend and potential lower returns in the future, and an unemployment problem that is starting to creep in the United States. South Korea, gold miners, and silver don't have those problems. Different problems, but not those problems I mentioned. So this right here, I like South Korea. I like the floor. This one, I would potentially look at getting in early next week. I love that it held right here, this $87. We'll see if this gap gets filled. Most do here from October 15th to 16th. If it does, you got to move down to $85. I don't think it happens. I think this actually has a nice move over the next 2 to 3 weeks. And this probably, if the global, volatility settles, I think this has a move to at least $92. And this is a strong performer, $92 over the next 2 weeks, but more likely a move to about $96. So that's a massive move. That's $7 in a geographical ETF. So check the liquidity on there. I think this is setting up. I think gold miners and silver set up closer to early mid December. All right. Thank you for waiting, Gaston. Hey, can you see MELI? We'll do one single stock looking for the day for a special viewer. Let's take a look. I hope you're doing decent okay this week out there. So here is Mercado Libre. Oh, boy. So this is now a $96 billion company on $26 billion in revenue, up almost 3% today. They have not split. This is a $1,900 name, $1,950. Can you talk about what you want to do with it in terms of time frame, if you're just buying stock or options? So this one, oh man, good question. So this one has not, this one's been exceptionally weak for the past, almost like a election day fervor as well. This one, man, so it fell out of bed here for the second time. Didn't enter yet. I want to go long. Okay. So, man, this bottomed. This is a complicated one. So this bottomed last essentially Christmas week at 1,646. And then it peaked 4 months ago, actually, in July at 2,645, rising 200-day moving average throughout until just literally 3 days ago, the 200-day moving average started to go lower. And it fell. That is a horrendous looking candle where it lost 8.5%. And then you get a hammer here, but you've been getting hammers all over the marketplace. Also very high volume yesterday. And you have the nearer term lows going, corresponding with SPY lows back here at 17.25 in April. So, man, all right. So I like it for the next 2 weeks. I don't know what your time frame is. That would help too. I think you got to move here to about, I don't want to say easy. Nothing comes easy, as we know. I do think you have a move to about 2120, okay, over the next 2 to 3 weeks. It may surge a little bit more than that, a little bit higher than that. But this 200-day moving average to me is looking a little scary here. I don't like, your entry, your time frame is 2 to 3 weeks as well. Okay, so I would, I would scale out then. So I don't hate your risk levels. Use a stop here. Maybe 1,800 or something like that. Depends how you're doing it, straight stock or options. But I don't hate your risk reward down here. But the going is going to get tough right around 2120. I would scale some out there. And then if you're lucky enough at 2275, it's interesting in terms of that trade. I would get out before, if I was looking at this quickly, if you're turning this into an investment, I would say be a lazy trader and wait for the successive closes above the 200 moving average. But basically, from what I'm putting together from you, that would be your exit, in my opinion. So I don't think it's a horrible idea. And ILF, Latin America, has been crushing it. So kind of don't love that it's not been doing well in a space that has been crushing it since October 1st. Last thing, I'm just going to check hometown bias for you. Yeah, so again, Argentina has been crushing it here. And a little mixed picture. I believe in the rising tides of all ships. I would have wanted to see it perform then. I don't, love its chances of going above the 200-day, that is. So, like I said, don't hate your risk here. I like entries, like you said, where you are under 1960. But I would scale out around 2120. Have some rules because the market tells me it's going to be a little bit violent moving, either up or down next week. All right. Go thank your blessings. Love your neighbor. Don't be a dick. And we'll see you on Monday. Bye.